Hey everyone, and welcome back to the Teaching Tax Flow podcast. Today, on episode number 159, we are exploring just what in the world the IRS means by no tax on tips. But first, let's hear from our episode sponsor.
Hi, Chris Picciurro here, founder of Teaching Tax Flow, co-host of the Teaching Tax Flow podcast, and pickleball enthusiast. Yes, if you listen to the podcast, you know almost every episode we talk about pickleball, the most popular and growing sport in America. We have tons of opportunities for paddles and pickleballs, but we don't have a lot of great gear on the market. Well, I'm so excited to announce that Sunsets and Dinks are now a sponsor of the Teaching Tax Flow podcast and produce amazing gear, not only to look at, but you feel confident on the court. Because you are part of the Teaching Tax Flow community, you get a 15% discount on all your orders with them. I know I love the gear I received, and I have quite a good record while wearing it. Believe it or not, even at my level. Go to teachingtaxflow.com/pickleball and simply enter TTF15 in the serve up promo code area of your paddle rack.
Hey everybody, and welcome back to the Teaching Tax Flow podcast. Today we're going to jump directly into something we know that there's a lot of interest about, a lot of confusion, but one thing that there might not be is tax on these tips. So we're about to start talking. Again, this is the output of the One Big Beautiful Bill Act that I'm sure everybody's heard a lot about, and you don't want to hear it from me. We brought Chris Picciurro back to his own show as always, the man with all the knowledge around here for the most part. How's it going, man? How are you doing?
It's going well. How are you doing today?
Hey, pretty good, man. No room for dad jokes today. We're jumping straight into this thing again because I think we're gonna cut the BS, we should say, and really say what this is. And is it literally as clear as that? The IRS is not going to charge any tax on any tips anybody receives. Is that the case?
Wouldn't that be easy? Then we wouldn't do a podcast. It would just do a 1-minute reel.
Exactly.
But no, that it's not that easy. Now, we know during the most recent presidential election, there's a lot of talk about not taxing tips. So part of the One Big Beautiful Bill Act, which obviously had to have bipartisan support, was the concept of no tax on tips. And that actually comes into effect in 2025, the 2025 tax year. Now, it's not that easy, right? There are some rules and regulations I'm going to work through to determine if your tips are exempt from federal income tax. Now, there's not going to be exempt from self-employment tax, or they're not going to be exempt from payroll tax. But let's talk about what's going on, because there was, again, part of the One Big Beautiful Bill Act. This is a temporary rule change that's going to affect tax years 2025 through 2028 for now. No coincidence that that is the term of this, the current president. So we will see, depend if this is something that gets discussed, extended with the next presidential election. But right now we know from 25, 26, 27, 28, these four tax years, there is a no tax on tip rule. And what does that mean? Well, it lets tipped workers deduct up to $25,000 of tips from their taxable income. As you said, John, it's not a automatic deduction. There are qualifications. There are income phase outs. There are industry specific requirements. We're going to dive into that, right?
And this, honestly, out of everything that we heard leading up to when that bill was signed, this is, speaking for myself, this is the one that really surprised me. I think that made it all the way through. I mean, and again, I think it leads a little bit to the we'll say not miscommunication, but kind of the confusion maybe of somebody thinking kind of like how I did at that time. They're like, oh, they're not going to tax any tips. Well, it's a lot of income that's in the system or maybe not in the system, which I'm sure we're going to chat on a little bit too. Why would they do that? That's like the IRS giving away free money. It's like them going down the roads and just, throwing checks out or something like that. So yeah, as we walk through this, I'm sure we're going to uncover that a little bit too.
Absolutely. So this is so something to consider. This is available to both employees and independent contractors or self-employed individuals. So most namingly, self-employed people that receive tips. Who would that be? Well, Uber drivers, Lyft drivers, taxi cab, DoorDash, all those type of self-employed people in a variety of different musicians, you know what I mean? So they're self-employed, they receive tips, so they're eligible. Let's first define what a qualified tip is. Qualified tip, this is very important, is a voluntary cash or credit card tip received directly from customers through tip sharing. So John, I worked in restaurants before. Many people have. Tip sharing is when, let's say there are 4 bartenders and they just all throw the tips into to a pool, either paid electronically or paid cash, and then they share them out. Very important term there, voluntarily. I was recently on a trip with our family. We met up with another family. We went out to a restaurant, got crap service. So I'd love to throw this restaurant under the bus, but I'm not going to. But because there was 8 of us, they decided that we were going to get charged an 18% service charge because we had a quote large party, which in this case gave them a green light to give crap service. Now, that being said, that was not a voluntary tip. That was assessed to our table as a service charge. Anything above that would have been voluntary on our part, and that server would have been eligible to exclude that tip from their income. So this is where I think we're going to see a lot of reporting issues, and a lot of restaurants may be changing things up from that service charge or whatever they call it when you have an automatic tip amount or not with a big party to it being voluntary. So remember, qualified tips have to be voluntary. As I mentioned, FICA tax, so Social Security, Medicare, and self-employment tax still apply. So this is a reduction of federal tax. You're going to have to check with your state if your state's going to comply with the federal tax rule, right? Because not every state's just going to comply with those rules.
And I'm glad that we hit that nail on the head pretty early on too about the voluntary part, because I think that was one, even when I learned about that semi-recently, it's not shocking, but I'm glad to see it, because otherwise it's like, from a consumer standpoint, it's one thing, but you're right. This I can imagine already is going to be so complex, because how are you going to categorize all these things, and what's the goals of it? How are restaurants, et cetera, going to adjust? Are they going to get rid of that model completely? Maybe. I don't know where it came from, frankly, to begin with. So we'll see. That'll be interesting, I think.
So it has to be a voluntary tip. We know. It also, there's an occupational eligibility factor. So you have to be an occupation that is customarily and regularly received tips. On or before December 31st, 2024, the IRS is publishing guidance as to what occupations are included. All right, definitely check out the Teaching Tax Flow YouTube channel. We have an entire playlist just on OB3, and we break down what those occupations are. But it has to be typically a occupation where you receive tips. Also, it can't be what we call an SSTB. SSTB stands for Specialized Service Trader Business. That's a concept that came out with the Tax Cuts and Jobs Act of 2017. So ultimately, that includes people that are like doctors, lawyers, accountants, financial advisors. So if you are a attorney and you do a estate plan for someone, right? And it's a flat fee, and that client gives you a $500 tip. That's great. It's taxable income. It's not going to qualify because you are in an ineligible occupation because you're in the specialized service trader business. So make sure you're following the Teaching Tax Flow YouTube channel and checking out the IRS website to determine if you are in a qualified occupation. Transportation, salons, all those type of occupations have been identified.
And I'll hit myself with a dum-dum hammer because I forgot what episode it was, but I remember I came up with some crazy example that, well, wouldn't just a plumber then start charging $1 for a $1,000 service and just tell the person to give him a $999 tip and then he's good? But this right here is going to completely keep that from happening, right? Because otherwise, you wouldn't get an invoice. You'd get a tip request or something, right?
Exactly. So, again, bartenders, wait staff, food servers, anyone in that, in that industry, bakers, gambling dealers, right? That's a customary occupations: singers, dancers, musicians, DJs. These are just examples. Ushers,
Yeah.
ticket takers, people that work in a locker room, people that shine shoes at the airport, concierge.
So
A
basically,
lot
when I
of
lay my head
dog.
down at night and go to sleep in my dreams, when I'm a singer, a dancer, an entertainer, hoping I was, hey, I won't have to pay tax on my dream tips.
Maids, barbers. Anyway, there's a whole golf caddy. So you've got to be in that qualified occupation. Now, there's an income threshold. What does that mean? Well, what a threshold means is that if you exceed a certain amount of income, modified adjusted gross income, then you're ineligible for this deduction. Now, this deduction's unique because it's not an itemized deduction. What that means is that you could be a non-itemizer and still get the deduction. And it's kind of a weird thing because it's not necessarily above the line. It's not below the line. I heard it referred to by a tax professional as between the line deduction, and I'm going to steal that. This deduction is reported on a Schedule 1A. Again, sound like a shameless plug, but do yourself a favor and check out. We have content on that schedule. Or if you're just thinking about this and you have a direct question, jump into the Defeating Taxes private Facebook group, defeatingtaxes.com. That's the Teaching Tax Flow group. And say, hey, I do this. Am I an eligible profession? We're happy to help. So income phase out. So if your income is too high, you get phased out of the deduction. For someone that's single, that's $150,000. For a married filing joint couple, that's $300,000. So once you hit that income threshold, you start losing part of that deduction. And there's a formula for that. But you are ultimately fully phased out at 400,000 single, 550 joint. So that's where anywhere between a married joint, 300 and 550, you're still getting some type of tip deduction. Anything between 150 and 400 single, you're still getting your tip deduction. You might be thinking to yourself, dang, $400,000. How many people make $400,000 and get in a lot of it and actually get tipped? Think about people in Las Vegas, servers at a nicer restaurant. I mean, they can make hundreds of thousands of dollars easily.
Absolutely. And that was exactly what was coming to mind when you were saying that is, those are some of the best careers in certain geographic areas, tourist destinations. Some of them make a
Absolutely.
killing.
Now, a couple of things you got to understand. To get this deduction, you have to have a social security number on your return. Can't be an ITIN number. And married couples have to file jointly to claim the deduction. Why? Because of the phase out. So if you're one of the advantages, we talk about married joint, married separate filing, you have to file jointly to be eligible for that tip deduction. Now, that tip's going to be reported on either a W-2, a 1099, or it could be reported on a Form 4137, which is a voluntary, you're voluntarily saying, hey, I've got cash tips, IRS. But ultimately, the best thing is for employers to report those tips on those year-end forms. So that those forms are going to change starting in 2026. So again, the most important thing is to keep track of your tips if you are a tipped employee or tipped self-employed person, and be ready to report that when you have your tax return prepared, either self-prepared or by a professional. Want to wrap up with a couple examples because I love case studies. Whenever I teach, I love case studies, and that they're just easy to kind of digest, right? So let's talk about that server. That server earned $20,000 in tips. It has a $50,000 W-2 wage. For that server, assuming they're single, they would be able to deduct the full $20,000 in tips. Remember that max is $25,000, but it's the lesser of your tips or the $25,000 max. And they would be able to take $20,000 off their taxable income on their federal tax return. Let's say you're a self-employed masseuse. You earn $25,000 worth of tips in your net income. Let's say you work only at, your net income was $22,000 after expenses. Well, you can deduct $22,000 from income. So if you're self-employed, right, your tip deduction is going to be the lesser of your $25,000 or your net income, right? So if your net income is less than the 25, you take that. So And then, let's say you're a married couple and you have $320,000 of modified adjusted gross income. One of the spouses received, $28,000 of tips. Okay. Well, the maximum reduction is 25 grand, but they're over the 300, the $300,000 modified adjusted gross income threshold. So they get phased out of a couple $1,000s. They still get a $23,000 deduction. So these are just quick examples. If you are listening or know someone that is in a tipped profession, make sure that you're keeping track of what these tips are. Make sure you talk to your tax professional to ensure you're going to get the best result possible, and you could properly report these tips and hopefully deduct them off of your federal income tax return and maybe your state return.
Yeah. And you had 2 good points there as we wrap, right? You have claiming it for one, or reporting it. And then obviously when it comes quote unquote tax time, I'm doing my air quotes here. So as you do that, we are going to go through this in a lot of depth. I imagine over and over and over again, as it starts to really hit the ground running, we're going to be touching on this from various different angles. So if anybody's listening, watching this, be on the lookout. We're going to have more and more and more as it rolls out. We figure out more, employees figure out more, or employers figure out more, and individuals figure out more. So that's what we're here for. Teaching Tax Flow, the podcast. Subscribe if you haven't yet. Don't be lazy. Check it out. And we'll see everybody back here again next week on the show. Same day of the week, different date, completely different topic. Have a great week, everybody. Oh, yeah.
And more tips. Take care.
Of course, more tips. That's what we're here for, but we won't tax you on them. So on that note, have a great week. We'll see everybody real soon.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.